Hi, I'm James George, and this is Alex Peters, and we have got another monthly report, this time for November 2021. Alex, how are you?
I'm doing great, James. Thanks for having me on. How's everything with you?
Things are good. So, obviously, going to talk about what's happening with the real estate market and talk about interest rates. One of the things that came out literally yesterday in the news, I want to just jump on straight away, is Zillow. And they have been buying lots of properties with the view of renovating them, sometimes maybe not even renovating them, just buying up properties and then trying to sell them at a profit. And what is really interesting is I was looking at the numbers and thinking, how are they making any money? Because they were like buying $1 million house on the market that would go for $1 million, and they weren't buying it cheap. They were actually buying it for seems to be like over $1 million, and then somehow trying to sell the place at less than what they bought it for at some time. And I was just like, I can understand the idea of trying to get market share, but I just could not understand how that business strategy was working. And so many, I actually know, I don't think any of my clients, but I know a lot of real estate agents, and they were asking me, how are you getting on with Zillow in your area? Because we're struggling to get listings at the moment because Zillow are offering such an amazing amount. I'm actually telling them, you should take the offer that Zillow are giving them. This is stupid, the offer that they're giving you. And so many people say to me all the time, well, Zillow says this, I want to get $1 million to my house because Zillow says this. Truth is, we have been completely proven right as real estate agents. Zillow is not the best company to work with. They basically have stopped their iBuying program because they were useless. And shows you once again that use a real estate agent that understands what they're doing. Don't just go to one of these big companies, because the truth is Zillow were losing an astronomical amount of money and have had to just sell all the homes, which actually might bring down house prices, believe it or not, in certain areas, because they're having just to get rid of them all, and just trying to get some equity back. So that's just a little bit of real estate news that I would want just to touch on. Alex, I gather you agree. Try and stay away from Zillow as much as you can.
Yep. Yeah, yep, absolutely. That report said 2/3 of the homes that they bought, they lost money on. So they bought 7,000 plus homes and lost money on 2/3 of it. They got 2.8 billion in real estate they still have to sell. They dropped however many cents per share yesterday. Earnings fell off like crazy, and they even admitted their Zestimates, which people love to tote and say, hey, look, my home is worth this according to Zillow. They kind of admitted they don't know what they're doing with that either. Like they're kind of just guessing.
And they probably were just using the price. Oh, Zestimate, our own algorithm says the house is worth this, so we'll just buy it. And then they
try to sell it, and then they lose money. It just goes to show big corporate type entities like that are just out of touch with local markets, and finding a local real estate agent makes a huge difference. When I go to purchase in other counties or other states, I don't use my same realtor that I use here in San Diego, because I need someone boots on the ground that actually understands the area, understands the market, understands, should we be offering over, under, how should the terms look? All of that makes a huge difference. So working with someone local that understands everything, it's going to be way better than using your Zillows.
I completely agree. And the truth is obviously I've done real estate all over pretty much Southern California. I cannot be an expert on every single area. So if you are looking at buying or selling anywhere at all, reach out to me, and I'll be completely honest, I often will not be the perfect agent for you. You want to have an agent that is really good in that particular area. I now know pretty much all of the good agents in all the areas. I can put you in touch with the right agent for you, depending on what you're looking for. The truth is if you're looking for a property that's $5 million in La Jolla, you should not be using an agent that is normally buying homes for, helping clients buy homes in Oceanside for 500,000. It's a completely different ball game, and you shouldn't just use, your mother's sister's brother's football coach. You should use someone who is a real, really good agent for that price point in that area that just understands, and they will sell it, often save you 10, 15, 20, 40, 50 odd thousand by using the right agent. So Obviously that's Zillow and talking about using the right agent, but what's going on with interest rates?
So month over month, they're just a smidge higher. On some products, they're the same, but I do smell the end of low rate. Well, I won't say the end of low rates, but they're going to tick up. As of about 30 minutes ago, we had an alert to lock our loans in from, I subscribed to a couple different experts essentially. And basically the Fed met today and they discussed tapering their spending because they are subsidizing by buying billions of dollars in bonds. So they're going to taper that spending, and the market reacted negatively towards, not necessarily that they're going to taper it, but how soon they're going to do it. They're going to start right away. And what I'm hearing is they're going to try and keep some spending going. I think it's in the region of 15 billion to keep the bonds down whilst the unemployment kind of sorts itself out and the workforce starts to build back up again. What I read between those lines is once the workforce is back up and unemployment numbers look a little bit better, the Fed's going to hike rates up themselves. They're going to increase their base rate, which then trickles down to everyone else. So end of 2022, I fully anticipate 4%, quoting in the 4% again. Right now on a conventional loan, I'm locking a couple loans in today at 3.25, one at 3.375 on a condo. They have good credit, they have good equity. Those are on purchases. So low threes are still in the conversation. FHA and VA clients, I even have 2.875 still in the conversation as well on 30-year fixed. So still super low, but just all the news that's been coming out recently and just looking month over month, they are slightly higher and they're going to continue moving that way. So if you haven't refinanced, I think you're looking at one of your last opportunities to do so.
Yeah.
If you want to get in now to purchase, I would absolutely do it. You know, there might be the conversation of our house prices overvalued. We can do an analysis for you on if you overpaid by 50K versus having an interest rate 1% higher. You'd rather have a lower rate. I promise you that. So reach out if you have any questions. The other thing I wanted to just chat about real quick is we have a new suite of self-employed programs and asset qualifying programs. So if you have clients or you yourself watching this, maybe you write off all your taxes, but you've got a lot of money in the bank or you deposit a lot of money. We have some really good new programs that are in the high 3%. And typically these, what they call bank statement loans or asset qualifying loans, they're in the 5 and 6% ranges. And I have abilities to broker to other lenders where they're in the high 4s,
awesome.
Low 5s.
And
ours are in the high 3s.
What kind of deposit would you need to put down for something like that?
We have one that starts at 10% down. Rates are going to be in the low 4s for that. The where you can get your high 3%, you're going to need 20-25% down for that.
Awesome.
But still, you can get in 10% down and get 4.125 right now, for
example. It is incredible that we're still here, you know, waiting for house prices to drop. And the truth is, at some point, more than likely, house prices will drop, but interest rates are going to rise. Everyone's situation is different because the problem also, there's so many different things you need to think about. One is can you actually get the house that you want? Is it actually on the market? There's still quite a lot of low inventory at the moment in most areas. And so people are going out and they can't find what they are after. Now, you've also got to think about this, is there are probably many other buyers in exactly the same position. So what happens is if we do start getting nice homes, more homes coming on the market, more buyers are then probably going to come out of the woodwork as well. So it's one of those that there never really is a perfect or a bad time, in my opinion, necessarily to buy. It's just up to you. So if anyone wants any advice on that, whatever, then please reach out with me. And often the best place to go to, first of all, is Alex, because he can help you with the finances. There's no point in you going looking at a load of homes at $1 million if you can only afford 800,000, for example. It's a waste of your time, and vice versa. If you're looking at houses and you don't really like them, and you actually find out you can qualify for more, and financially didn't realize that you're not going to be spending as much as you thought because interest rates are low at the moment, then it's best reach out to me and Alex. Alex will work the numbers, and we can help you find the right agent for you to get the right home. So Alex, thank you so much for your time. Really appreciate it, and look forward to chatting in December.
Yeah, thanks for having me on. If you guys have any questions, just reach out and we will chat in December. Thanks, James.
Have a good one.
You too.